Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. I wanted to create a video that covers every event happening this week, day by day, and we'll kick it off with a look back to Friday's close with the year-to-dates from Exec Sum. S&P 500 up 8% so far this year. The Dow up 2.7%. NASDAQ up 8.9%. Russell 2000 up 3.5%. Bitcoin, this is as of Friday, up 59%. Ethereum, 67.5%. Gold, Friday, stood at 2186.20, up 5.5% for the year. Oil, 77.85, up 9.1%. And the 10-year Treasury, as of March 8th, 4.060, up 12 basis points year to date. Okay, now let's break down this week's event by the day and see if we can't find something for the hedgies to trip over. Starting with Monday, from the Cryptopolitan, U.S. banking sector draws speculation amid BTFP closure. As the U.S. Fed Reserve's Bank Term Funding Program approaches its conclusion, the financial sector is abuzz with speculation and concerns about potential ramifications. Launched in response to the banking collapses of March 2023, the BTFP served as a critical lifeline for struggling institutions, including regional banks like New York Community Bancorp and commercial real estate lenders. Okay, that's all over on Monday. Now let's move to Tuesday and Market Watch and CPI. Expect plenty of hand-wringing about hotter inflation next week. With the confusing U.S. February unemployment report in the rearview mirror, economists will be looking at the consumer inflation data this week to get a better sense of what the Fed Reserve might do with interest rate policy. But the data could lead to more hand-wringing on Wall Street over fears that inflation is re-accelerating, said the team at Oxford Economics in a note to clients, as a rebound in gas prices likely helped drive inflation higher last month. That's what we need to be watching for. The headline CPI is expected to tick up a bit to a 0.4% gain from a 0.3% gain in January. That would be the biggest gain since September. Year over year, inflation is expected to remain at 3.1%. So that's the rate they're looking for, and for a second straight month. You get double upticks here, and we could have a problem. The core measure, which excludes food and energy, is seen rising 0.3%, a tick lower than the previous month. Year-over-year core inflation might dip to 3.7 from 3.9 in January. That would be the lowest reading since April of 2021. Now let's move to Thursday and February PPI. Producer prices are expected to rise 0.3% in February for the second straight month. That will be the first two-month increase since September. PPI is really important this week. All eyes will be on the services components, which feed into the Fed's favorite inflation measure, the Personal Consumption Expenditure Index. Also on Thursday, February retail sales. Retail sales are expected to rebound in February, rising 0.7%, almost completely reversing the 0.8% drop in the prior month. That would be the biggest gain since September. The gain will be led by higher gas prices and stronger car sales, said Scott Anderson, chief U.S. economist at BMO Capital Markets. And now let's do Friday, 10 o'clock Eastern, March consumer sentiment. Consumer sentiment is expected to rebound to 77.5 in March from 76.9 at the end of February. That's still below the 79 reading in January. The uptick in the unemployment rate and gas prices kept the lid on consumer sentiment, according to Oxford. But that's not what I'm watching for on Friday. This is what Uncle Frank is watching for Friday, March 15th. Quadruple witching dates for 2024. How can they impact stock and futures trading? From the article, futures and options are derivatives linked to underlying stock prices. When derivatives expire, traders must close or adjust positions. That can trigger significant volume and order flow. The four types of derivatives expiring on quadruple witching are stock index futures contracts, single stock options, options on stock index futures, and stock index options. So, Uncle Frank, why should we care about quadruple witching on Friday? Well, number one, guys, it caps off a wild week of economic announcements, any one of which could cause a hard shift in the market. I'm also very interested because there are nearly 260,000 out of the money calls for AMC expiring on that day. It's been elevated for weeks, so I'm not the only one that's anticipating some action by then. Not investment advice or advisor. Just to give you some context, the previous Friday, there were only 61,000 out of the money calls expiring. The week ahead, only 17,000. So I'm curious, why almost 260,000 OTMs expiring on March 15th? We're going to find out. Okay, now guys, I want you to ask yourself this question. What do we know about conditions going into this week? Let's start with Reuters. Global markets, stocks at record highs. Treasury yields fall after U.S. payrolls. Okay, and then we learn this. Bank failures are coming, according to Fed Chair Jerome Powell. Think about that for a minute. The head of the Fed Reserve told you bank failures are coming, right? Then we learn this. Hedge funds snap up stocks at fastest pace in 11 months, according to Goldman Sachs. So those guys are diving in. Then we've got this from Reuters. Mounting U.S. rate cut bets fuel gold to record highs. But Uncle Frank, why? Well, let's go to that article. Gold scaled a record high on Tuesday, moving further above 2,100 per ounce in a rally sparked by growing bets for U.S. interest rate cut in June and on safe haven demand due to the conflict in the Middle East. Okay? Now, Bitcoin price hits 70,000 all-time high as U.S. jobs data squashes the U.S. dollar. And then, what's Kenny doing? Let's keep an eye on Kenny. It's not the only hedgie we got to worry about, but he's definitely one of the prominent ones, right? Okay. Billionaire investor Ken Griffin's biggest Citadel Advisors stock positions are 5 brilliant artificial intelligence stocks. That's from yesterday. Then we learned billionaire Ken Griffin owns every single one of the Magnificent Seven stocks, right? So we know not only are hedge funds diving in at the fastest pace in 11 months, but Kenny in particular is long big tech and AI. Okay, we also learned Kenny invested along with Steve Mnuchin in New York Community Bank Corp. So guys, I have wars. I have inflation worries. I have people screaming for rate cuts. I have new highs on gold and a risk asset we know as Bitcoin. It's an election year. I've got markets at record highs. I've got hedgies piling into equities. I've got billionaire hedge fund guys rescuing banks. I've got the head of the Fed telling me to count on bank failures. We have a commercial real estate crisis that keeps expanding. Now, I can't promise anything. This isn't an investment advice, and I'm not an investment advisor. But I can promise one thing. These are the conditions I've been waiting for to welcome a black or white swan in for a landing. So guys, Monday, the Fed ends the Bank Term Funding Program. But CPI Tuesday is the next thing we have to focus on, and Bloomberg feels just the way I do about the matter. Headline: traders are on alert for a hotter than expected inflation print. A month after the stock market was rocked by a worse than expected inflation report, investors are fearing a reprise when the latest data arrives on Tuesday. They think it could happen again. Despite last week's sideways price action, the S&P 500 index is on a tear, climbing in 16 of the past 19 weeks on the back of improving earnings outlooks and a resilient U.S. economy. The broad equities benchmark hasn't had a better run than this since 1964. But some of those gains could be undone if the monthly consumer price index reading continues to show inflation remaining stubbornly sticky. Why do I feel like people in Washington and on Wall Street already know this number? If I've learned anything from this AMC experience, is we can't trust anyone, anywhere, with anything anymore. You see, I get really suspicious when all these guys start saying the same things. From Seeking Alpha, the February CPI report may deliver a big shock to markets. Feb CPI report is expected to show higher inflation readings than January. Inflation swaps pricing in even hotter inflation, posing a risk for the CPI report. Gasoline prices contribute to the expected rise in inflation. Now, guys, if everything is so great, why are all the billionaires piling out of their stocks? From the Daily Mail Sunday night, do they know something we don't? American Titans, Jeff Bezos, Leon Black, Mark Zuckerberg, Jamie Dimon, and Walmart's Walton family sell a staggering $11 billion in stock as billionaires cash out before the looming election. Now, I don't think the selling here has anything to do with the election. This is the press trying to say that things will be so horrible if Trump is elected, the smart money is running for the sidelines. No, I think the elites see a top here in the market and are unloading to take profits. That's Jeff Bezos of Amazon on the right. And Jeff, what's up with your girl's face, bro? Honey, put the Botox down. You get any more facelifts and the back of your ears are going to start to touch. And now an update for my XRP fans. XRP ain't doing much other than holding on to 60 cents, but there is something out there to mention. From Cryptopolitan Sunday night, Binance's massive XRP shifts spark speculation. And on the right, you could see the tweet from Whale Alert that kicked off that article. 18,766,000 XRP, which is about 11.7 million US dollars, were transferred from Binance to unknown wallets. From that article, in a recent series of transactions, Binance, one of the leading cryptocurrency exchanges globally, has transferred substantial amounts of XRP to undisclosed wallets, raising speculation and curiosity within the crypto community. The transfers, each exceeding 18 million XRP, have prompted questions regarding their purpose and implications for the digital asset. Now, some dates I want you to know about from this article. Judge grants SEC deadline extension on Ripple case. U.S. District Court Judge Annalisa Torres has approved a request from the U.S. SEC to extend the deadline for filing a submission that could bring its case against Ripple Labs to an end. Court documents filed on March 1st granted the SEC an extension to file its remedies-related discovery materials submitted by Ripple. The extension allows the regulator to file its opening brief until March 22nd. The deadline for Ripple's opposition brief has also been extended to April 22nd, and the new deadline for the SEC to file a reply will be May 6th of 2024. Well, the SEC is dragging this out instead of regulating the bad actors in the securities markets. But once they're out of the way, I'd like to see who's going to stop this company, Ripple, and its coin, XRP. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.